So this is the credit risk. That is the first risk. Second risk is market risk. Market risk is what? Market risk means the value of an asset will decrease due to changes in the market factors. For example, I have taken a lot of bonds in my portfolio. So bank has invested the money deposited by the customers in some portfolios with some bonds, debenture, derivatives like this thing. Now what happens due to increase in the interest rate, price will sharply come into negative region of what? Bonds. So please make sure that if any interest rate increase take place into the market by RBI, suppose repo rate increased, what will happen into the market? Immediately bonds yield will increase and bonds price will decrease. Price decrease means suppose I have taken 100 rupees bond, that is a 100 rupees price bond 1 year ago. This year interest rate increased. Now that 100 rupees will value at 95 rupees. Getting this thing. So that is a market risk due to markets factor, economic depression, highly interest rates, high borrowing cost. This can come to market risk. Now when you are getting,
Yes, sir, I'm able to understand. Yes, sir.
yes. So specifically if you see the changes in the market economy in negative zone, high inflation and high unemployment, like this situation, then this market risk will come in. Next is operational risk. So what is operational risk is during day-to-day operation, failure of their IT system or ethical or unethical hacking if take place. You must have heard the news of UCO Bank's IT system was hacked and IMPS money was taken by some hackers, fraudster. So this was, I think, 7 months old news. So this is the operational risk. Means that is related to day-to-day operation. Day-to-day operation means what? Any employee may be involved in that. An employee must be working on the some system. So system may also be hacked. Like these things, this involves operational risk. For your kind information, when I appeared for the NIBM interview, I was asked what is credit risk. That's why I'm saying this thing is important. These three risks, please read it very carefully. So there are three pillars of Basel norms. You can see the first is capital adequacy norms. Capital adequacy requirement means suppose you have 100 rupees equity at present, you are owner of the bank, 100 rupees equity. So you have to keep at least of 50 rupees as an high non-liquid assets and high valued assets like gold you can do like these things getting this thing. So there is a 9 to 14% it varies. So for the India it is 9%. That 9% of whatever you have portfolio value you have to keep off that 9% as a highly safeguard capital. That's why you see that tier 1 plus tier 2 capital of any risk weighted assets, we keep this percent. So let me tell you example, if you have a risk weighted assets of 100 rupees in your balance sheet, means you have given loan because banking's main operation is giving the loan. If you have given the loan of 100 rupees, only 100 rupees, just think nothing like apart from 100 rupees, only bank is doing loan and giving 100 rupees. They will keep 9 rupees out of that risk weighted assets as in tier 1 and tier 2 capital. What if they don't have tier 1 tier 2 capital? So tier 1 is common equity capital. Tier 2 is if they don't have, they can buy some bonds of the same 81 additional tier 1 capital. You must have heard this bond. in the newspaper if you will read. Getting this thing. Now you will ask what is risk weighted assets are. So risk weighted assets comprise of this thing: credit risk plus market risk plus operational risk. Getting this thing. So if panelist is asking anything, they cannot go in their depth. You have to read only definition. Only definition. Next is supervisory review. So supervision, as going on, and IndusInd Bank recently has been banned by RBI also. So that is what lack of supervisory review. If the management of IndusInd was in the supervisory review, this must not have happened. So proper supervision should take place by the bank management and RBI authorities. And market discipline in the sense, let us take example of any personal view of market discipline. How much you have to invest of your salary into equity, how much percentage you have to take gold, how much percentage you have to give to the NPS. Like these things, proper division should take place. That is a discipline. Getting this thing. So this discipline bank has. Bank knowing that the in any way equity is going to give the highest return, they will all their fund all will be invested in the equity. Suppose equity crashed, what will happen? Lot of market risk will getting their balance sheet will wiped away. So this should be their discipline.
Sir, a small doubt. So, uh, do they need to maintain CRR plus SLR plus this 9%, sir?
No,
Banks
CRR is maintained of what?
like
Total deposits.
uh,
Total deposits will
SLR.
maintain CRR.
SLR is also on total deposits, like to
Yes, but
safeguard,
this is not the
safeguard it.
total deposit. This contains something more than the total deposit. I
Okay,
told you
okay,
the out of this credit risk, market risk, operation risk. So weighted assets we have to take. What amount this is in your portfolio, weighted you have to take. Then 9% of that this should be getting this thing.
okay,
So nine
okay, sir.
percent
Okay,
of these risks should be your tier one capital. Equity in equity side, tier one capital, and additional tier one capital and tier two capital like this. This is not something like CRR and SLR.
okay, sir. Okay,
So this means that if all the risk take place, at least 9% we have buffer. All the risk take place at a time, 9% we have buffer. Next is Negotiable Instruments Act, and Negotiable Instrument Acts means this is the written order or unconditional promise to pay a fixed sum of money. For a simple example, you can check. Check is a non-negotiable instrument. So check is how it is an instrument is for example you just write on the check, pay to this person fixed sum of money and sign on the check. So whoever will hold the check, present it to the bank, that will be cleared with that money and given to that person. Getting this. In the same manner, this is a demand draft. You must have worked in your university. They must have asked while you are taking your mark sheet for the demand draft of 10 rupees, 100 rupees, like this. So this is the demand draft. Whatever money you have written, you have to pay. There are different types of check. No need to understand different types. Only you have to get what is check. Check is a negotiable instrument under the Act 1881. And many holidays are being offered to bank employee under this act also. You must have heard this has been declared as a holiday under the Negotiable Instruments Act. Demand draft. So demand draft is just similar to check. But what happens actually, suppose you hold demand draft and checks together. Now let us talk about check. You prepare the check of 1 lakh rupees. but you hold only 50,000 at present. You say that front person, you say that just I am issuing the check of 1 lakh, just present it to the bank on the 30th of April. Why? Because right now 50,000 is there now. On the 30th April, what you will do, you will deposit 1 lakh rupees in your bank account at least. Because you know that if there is no sufficient balance, check will not clear, it will bounce. Adnan getting this thing. So check to clear, it must have minimum balance.
Sir,
But what
if
amount?
the money is not in my account, so and I issue a check, then he will give some time to deposit the money, right?
No, no. He will not give you the time to deposit the money. If your account doesn't have sufficient balance and he presents the check.
Okay, sir.
So check don't has any date, like on this date you have to present. Getting this thing. There is 3 months
Okay,
from the date on which he has signed. You have 3 months.
okay,
Within 3 months, any day you can present. But you present on a day in which accounts has no balance. That 1 lakh rupees is not there in account. Then what will happen? Check will bounce. Check will not clear. Coming to demand draft, what will happen? You will go to the bank. You will just take the demand draft slip. You will write all the details from this bank to, for this person I am drawing this demand draft, and you will give it to the clerk sitting on the bank branch. Now what will happen, and this can only be issued offline. You cannot get online demand draft. Now the clerk what will do? Clerk will check in your account before issuing demand draft key. You are holding that balance or not. If you don't have that balance, he will not issue demand draft. If you have balance, then only he will issue demand draft to you. You will take that demand draft. You will go to your university and present this demand draft to the university academic section. Now, university, what they will do? University taking that demand draft will come to the bank and present it to the bank. Now, bank will give money to the university person. Getting this thing? So, check can be bounced. Check can be bounced based on the accounts has sufficient balance or not. But demand draft can only be issued if you have sufficient balance. So earlier, what used to be in check clearing, this was a very physical system. Means earlier, for example, for a day, 9 a.m. bank is opening, 5 p.m. bank is closing. From 9 a.m. to 5 p.m., whatever person will come taking check, bank will deposit in a box. Okay, so that doesn't matter if you came at 9 a.m., you came at 9 p.m., you are at the same level because same box has all the checks. Now, in the evening, what happens? One, what we say, one trolley like came. Means van like come, take the box of the check and go to the nearest clearing house. This was earlier rule. Getting this thing. Nearest clearing house they went and they deposited the check. The check clearing takes place for the 1 day, 2 day like this thing. But now what happens? You go to the bank, you draw the check immediately within half an hour. Your check gets cleared. Why? Because this is check truncation system. Image based clearing system has been introduced in India. So you must have seen that MICR code in the check. So MICR code basically scanned by this machine, gives all the detail, and check gets cleared on the same day or the 24 hour. So actually at present this is on the same day mostly. Half an hour you get check cleared. Second is small finance bank. So you don't have to read this thing capital requirement. What is the minimum capital requirement? Okay. What is the promoter's contribution? This is a very critical information. If you have keen interest, then only you. Otherwise, you only know what is a small finance bank. So a small finance bank was made to cater only unprivileged section of society to enhance financial inclusion. So when we say that only underprivileged section of society, what do we mean? It must contain some more percentage of priority sector lending compared to commercial banks. You remember only why it was made for the financial inclusion and the community, that is Usha Thorat community. That is important. So you know that for the priority sector lending of the commercial banks, that is needed minimum 40%. 40% whatever credit will be you will give. 40% of that total credit should belong to PSL, priority sector lending. But in a small finance bank, this is 75% of adjusted net bank credit will belong to priority sector lending. That's why it is small finance bank or enhancing financial income. This is also criteria for the first 3 year. 25% branches should be in unbanked rural area. So see how it is the financial inclusion doing. Now the payments bank. Payments bank are what? They are also increasing financial inclusion. How they are increasing? They provide small savings accounts. Small savings account. You must be very familiar with Airtel Payment Bank, what is now operating. But they have also applied for the small finance bank. They have curtailed their eligibility for the small finance bank. They have applied for the license of small finance. This is on the committee of Nachiket More committee. So minimum paid up, you don't have to remember why it was made, because small savings accounts facilitating this payment scheme. Now you see that payment bank can open a small savings account and accept deposit up to 2 lakh rupees per individual customer and provide remittance service. But they cannot provide credit card facility. They can issue debit card, but they cannot provide credit card facility. So three things you have to remember, that they are financial for the financial inclusion by providing small saving account facility. The minimum, maximum deposit they can accept 2 lakh rupees. Getting this thing, and they can issue debit card but not provide credit card facility. So let me
Sir,
tell
they
you
can
how
provide loan.
they can provide loan, but not directly. Getting this,
So
they
then
will just
how?
tie up with a third party and they will get in touch with you. Then they will. Now what happens,
Okay.
that how you can become a commercial bank? You see SBI, HDFC, ICICI, how they became so big. Means initially they have started something at the lower pace. So they just became big. Firstly, you have to become a payment bank. Then you will just clear some eligibility, clear some criteria. Then you will become what? Small finance bank. Being 3 4 years a small finance bank and having a adequate capital and good record, means less NPA ratio. This will give you the criteria of commercial bank. So this is a step by step. And this doesn't go any one day, in one day getting this thing. Now financial markets, that are very important. So there are two type of market: money market and capital market. What is money market? Money market means less than 1 year maturity instruments are for money market. Means less than 365 days maturity is money market. What is capital market? More than this, straight away. Now, what are the things under which they can ask? So all the terms are very, very important. I will suggest this you don't miss. What is call money? What is notice money? What is term money? What is treasury bill? So T bill can be asked because this is a very highlighted thing is T bill is issued by always central government. Getting this thing. Now central government will issue T bills of what? 91 day, 182 day, 360. For example, they issued for the 182 day. Then what will happen? On the first day, suppose this is a 100 rupees T bill they have issued, and they are saying that 5% interest rate is we will give it to you. Okay, I will tell from where you can buy this T-bill. You can buy this T-bill from your RBI retail guild platform. Is there? You can register yourself. You can buy this. So suppose you are going to buy 180 T-bill having 100 rupees of maturity amount, 5% of days of interest rate on today. So every Friday or Thursday they are making auctions. You can participate on that. So you have to give 95 rupees today. If you are going to buy, you will give 95. Now after 182 day from today, when it will come to maturity, you will get 100 rupees back. So what is your interest? What you earned? 5 rupees you have earned.
5 rupees.
Yes. Or else people what they will think if they will go the bank, they will do the 1 year FD. Then bank you have deposited 100 rupees. They are giving 5% interest. So after 1 year, they will return you 105 rupees. But this is not the case with T-bill. T-bill, you will go to buy for a 5% interest rate. You will take 95 rupees. Initially, you will deposit 95. At maturity, you will get 100 rupees. So what is different? 5 rupees. That is same. But the manner is different. So minimum T-bill amount is 10,000 rupees. 10,000. This amount is wrong. Please rectify this. 10,000 rupees is minimum deposit amount. Due to these character, because in discounted we can buy at maturity at face value, we call it zero coupon bonds. Getting this thing. So zero coupon bonds have similar structure like. Now the government can issue T-bills, but what corporate will do? Corporate will issue commercial paper. Corporates, primary dealers, and all India financial institutions will issue commercial papers. What are commercial papers? So commercial papers minimum investment is 5 lakh rupees. Getting this thing, you can also invest. Retail can also invest in commercial papers. You go to Zerodha Coin, you search any mutual fund. Under the mutual fund, you will see some percentage has been given to commercial papers. This is also zero coupon bonds. What table follows? So 5 lakhs or multiple, this commercial paper can be issued. For the 1 year, we can issue this. Why? This is money market. That's why up to 1 year. Minimum is 15 days. Certificate of deposit is what? You go to the bank, you deposit minimum 1 lakh. If you have to take certificate of deposit, you deposit minimum 1 lakh rupees. You say to the bank, give me certificate of deposit of 1 lakh rupees. They will give you a deposit. Getting this thing. Now, the period of the maturity for any bank is 7 days to 1 year. But any other financial institution for 1 year to 3 years. So you have to remember what is certificate of deposit, how it is being issued, and what is minimum amount to invest, and nothing more than this. So these were money market instruments which potentially can be asked to you. Coming to capital market, so as you all aware that what capital market is, what you are investing in equity, you are trading, your options, forward, futures, everything is capital market. Apart from these forward futures, there are some bonds debenture that are also capital market. So capital market can be divided into two subcategories: primary market and secondary market. Primary market means when company is going to issue security for the first time, means till now the securities of the companies are not available on NSE or BSE. The moment they make first entry, they launch their IPO. You got allotted. That is primary market. Now you have been allotted some 100 shares. I will purchase from you in NSE. At NSE market, I will purchase from you 100 shares. So what we are interacting, that is secondary market. Because I'm not going directly to the company na, to buy. You have went to the company, bought the share, now you are giving to me. So you have interacted, that is primary market with the company. You interact with me, that is secondary market. Bonds are what? Suppose you must have heard that in Shark Tank India, what happens? They are asking for exchange of equity of this rupees, then I will give debt of this rupees. So that debt can also take a form of bond. I will give you 12 lakh rupees for a 12% interest rate. So for the same amount, if they have given bond to you, getting this thing, that means you will get 12% interest on the 12 lakh rupees every year until maturity. At maturity, you will get your 12 lakh money back. So this is a bond. Suppose today I released my bond of 12 lakh rupees, and this is a corporate bond. Any corporate will issue, that is a corporate bond. Any government will issue, that is government bond. Convertible bonds means same amount bonds have can be exchanged or converted into equity if they are defaulting, they don't have money to pay at the maturity time. Now what is masala bond? Masala bond, as you are very much getting the vibe of Indian things, masala. So masala bonds are bonds which are issued by any Indian company in foreign. Getting this thing. So first of all, if masala bonds are issued in India, we will not call it masala bond now, because we all know Indian bond, government bond, corporate bond, anything we can say. But to recognize this, if this has been issued in foreign, this is called bond. But we know that in foreign market, if any Indian company issued it, so they will represent India as a saying masala. Getting this thing, masala bond. By this way, you can remember this, because masala represents Indian culture and cuisine. Now, green bonds means the money we will get after issuing bonds will be used only for greenery purpose, unpollution, non-polluted way we will use. That is green bond. Debentures are same as a bond. The moment any corporate will issue, that will be called debenture. The same thing corporate will issue debenture. The same thing government will issue bond. Name is different, thing is same. What is equity investment? You purchase a share of any company, that is called investment. Since you have purchased the share, that is equity. Next is dividend. So you must be aware of dividend. What is dividend? You have purchased 100 rupees share of Tata Motors. Suppose Tata Motors has announced 4% dividend for this year with a record date of today. So if as of today you have that share in portfolio, you will get 4 rupees for every 100 rupees share you hold. Getting this thing? So this dividend is announced when company has earned immense profit, that such a large profit company has earned in a year that they are not just thinking to make any investment out of that profit. They want that this profit should be distributed into shareholders. Getting this thing? Outstanding shares, whatever shares are floating on the NSE or BSE, where we can just trade. You bought 100 share, 10 share, 1,000 share. What are these? These are outstanding shares. Getting this thing? Now I will send another link to you all. Please join with the same. That will be the meeting starting with preference shares. Getting this thing? Wait for 1 minute. I am sending you just now.